So one discussion I have with my clients on a regular basis is the subject of taxes. Well, I'm a financial planner. I'm not a tax advisor. I always encourage clients to go to their CPA, their tax professional before they make any moves that are going to generate taxes, or maybe if we're talking about something that affects their taxes, I always recommend that they see a professional tax advisor. However, as a financial planner, we can talk about tax planning, and taxes are certainly incidental to investing and planning for the future and things like that. So one thing I found that's very, very handy is to go over a client's tax return with them. Now, I've had some clients recently tell me, maybe new clients that have come on board, they said, we've never been asked for a copy of our tax return before. And that just completely blows my mind. As a financial planner, it's kind of like going on a road trip without a map or without knowing where you're going in general. And so, taxes are definitely a huge driver of decision making in financial planning. And so, I just wanted to show you a copy of some of the things that you should be thinking about. I produce a tax report for my clients on an annual basis, and we refer to that throughout the year. It's just information that we need to know to help make decisions, to make good investment choices, things like that. So I wanted to share you just a copy of my tax report that I do for clients. So again, I am a certified financial planner. I am not a tax advisor, and so this video is really meant to be educational. It's not meant to be any type of tax advice or anything like that. So please consult with your tax advisor before making important tax decisions. So I want to share you a copy of my sample. This is just a sample tax report. I called it, tax report for John and Jane Doe here, and it really just shows some of the basics about their tax return. Okay, and so I'm going to show you, like for example, on the header, just on the top of this tax report, we have a section, we call it the key figures report. And so it just goes over all the basic information. I mean, when you do your taxes, do you ever look at your tax return? I mean, really, most people, all they do is they determine, hey, do I get a refund or do I owe money? That's all they look at. And so this really gives you kind of the nuts and bolts, the stuff you really need to know about a tax return. So if you look at this, total income, what your adjusted gross income is, what kind of deductions did you have, what your taxable income was, and then what the amount of tax did you have to pay. And so you'll notice here, this is just a sample, just an example, of course. Married, filing, jointly couple. You'll notice it says they're in the marginal tax rate of 22%. And so, but what they're actually paying tax on, they call it the average rate, or some call it the effective tax rate, is about 8%. And so we'll dig into the little details about that. Safe harbor just means, like, if you're a retired couple, for example, that's the amount that you have to send in throughout the year. It could be through tax withholding, could be estimated tax payments, things like that. But it just gives you all that information just right in one shot here. Gives a summary of their dividends, capital gain situation. This example, a couple's taking Social Security, so what is that amount? How much of that is taxable to them, etc. So really handy information just to know, where do you stand from a tax perspective, and this tax report does that. So there's several sections of this. I just want to show you, for example. So you hear a lot of people saying, "Oh, I'm in a high tax bracket," or "I'm in the 25% bracket," or whatever. Most people really don't know what bracket they're in, and more importantly, they really don't know what that actually means. And so I go over this with my clients. I think it's really important to look at. So if you look at this, there's a tax bracket window here that we can look at. And in this particular example, it shows this couple had income of about $96,000, which puts them in the 22% tax bracket. Now, of course, that doesn't mean that all their income is taxed at 22. Some is taxed at much lower. Part of it's taxable at 10, part of it's taxable at 12, and then their next dollar that they take out is taxable at 22. So it's important to know kind of where they stand. Also, this report will cover capital gain rates. If they sold something at a profit, like a long-term capital gain, if they've held it for over 1 year, what rate is that taxed at? And so this kind of tells them where they stand from a capital gain standpoint, and what income threshold would they have to get over for them to pay a higher rate. In this case, they're in a 15% cap gain rate, and what would it take for them to get into a 20% cap gain rate? So very good information. Also, this will just talk about what kind of modified adjusted gross income tiers they're in, just about various different subjects. Like, can they make a Roth IRA contribution? They're under the limit. Things like student loans. How does that affect their ability to take out certain student loans for their children, presumably. And so a lot of good information there. Are they under? Are they over the limits? And we'll cover that just based on individual client's need for sure. Deductions. So a lot of people can't itemize their deductions. And what does itemizing mean? That just means that I have so many deductions. Think about like mortgage interest, property tax, maybe charitable donations, medical expenses, all those things. If they're over a certain amount, I can itemize. Okay, so most people just take a standard deduction. Now this is for 2021 in this example, so the standard deduction is a little bit higher now, but at that time it was like $27,800. So you can see here, this particular example, they were able to itemize. In other words, they had enough deductions where they exceeded the standard deduction, and so that's pretty. Dealing with lots and lots of people, that's pretty uncommon, I would say, to have that many deductions. Most people take the standard deduction, but in cases where maybe they have a bunch of medical stuff or they're very charitable, boy, that really could add up, and they can actually itemize their deductions. And so this video is not about how do you itemize and all that. It's just we go over that in this report and we have a detailed conversation about it. Another section, so for retired clients that maybe are Medicare age or are about to be Medicare age, there's a section here which shows them, hey, if I was to have a certain amount of income this year, that could affect my Medicare premiums in 2 years, because see, there's a 2-year look back for Medicare premiums. So if your Part B or Part B premiums that you're paying, depending on your income, you could actually pay extra every month per person based on your income 2 years ago. So I'll go over that with clients and just show them, hey, did you know that your income, that you're getting, while it's great to have the income, it affects your Medicare premiums. And so that's why you're probably paying more for Medicare right now. And so those are really important things to talk about. Could lead to some good planning opportunities. Maybe if they can be a little bit smarter how they take their income out. Maybe if they have a variety of sources like a brokerage account, an IRA, a Roth IRA. Maybe we can plan properly to where they're not paying these exorbitant premiums when they're Medicare age, or at least in 2 years. So it's really important to talk about that. I don't think a lot of advisors really cover that, and so most people I talk to about that, it kind of blows their mind. They're like, I had no idea that this causes my Medicare premiums to go up. And so I think it's a really good topic to talk about. As far as another thing that's very important, capital gains. There's another section on my report that I generate that just talks about what were their capital gains, long-term, short-term. Did they have any losses that they realized? In other words, they sold something at a loss. Could be as a result of doing some tax loss harvesting. That's a very efficient strategy to sell something at a loss so you can offset some capital gains. Nobody wants losses, but if they're there, they can be handy from a tax perspective. And so this covers that. So in this particular example, client had a certain amount of capital losses for the year, and they were able to carry forward, in this example about, can't see that without my readers, but about $62,000 that they are carrying forward to future years. So in the future, they have a capital gain. They can say, hey, I'm carrying forward some losses. I can offset that capital gain. So that can be carried forward indefinitely, at least right now. So those are just some key highlights of this report. I also just kind of have an observation section here where I can put in, different things. Hey, did you know that you paid a penalty because you didn't pay your estimated taxes on time this year? Or hey, you're eligible to do a Roth IRA, and I noticed you didn't do that. So those are different things that you can cover with a client that can really enhance their tax situation. It's something we can refer to throughout the year. So, what some of the best things I find about the tax report are, for example, if somebody's retired and they're not subject to RMDs yet, this Secure Act 2.0 extended the RMDs either 73 or 75, just depending on your age. So if you're retired, you may have a window of time before you have to start taking your minimum required distribution out of your IRA. So we might look at this tax bracket, this slide right here, and say, hey, Mr. Client, you had about $96,000 in income this year, which means you're in a 22% tax bracket. And you can still have income up to $172,000 without going into the next bracket, which is 24. So that might bring up the topic of, hey, maybe we can do some Roth conversions between now and the time where you don't have any choice. You have to pay taxes ordinary income on these RMDs, and they could be pretty substantial depending on, I've seen some huge IRAs that are all pre-tax. They have not been taxed yet. And so you have a window of time to try to knock that balance down and put some assets in the tax-free column instead of just all in the taxable column. So it can be very useful to be looking at this information on an annual basis. I really like to have a December meeting with a client, and so we really talk about, hey, what's our income like so far this year? Based upon our tax report last year, we can kind of carry that forward and run some examples, some hypothetical situations. Maybe it's a Roth conversion, charitable donations. Maybe it's how we pay our property tax. Maybe we're going to alternate that every other year. So a lot of key planning topics that can come up by just being informed about the tax situation. And so I don't think it's good enough for an advisor just to say, hey, what tax bracket are you in? That is part of the story. It's a very small part of the story. And a client may not know the information, and they might even tell their advisor the wrong thing because they just don't know it. But getting a copy of the tax return and reading it, looking at it, producing this tax report that they can look at together, together with my client, I think it's super helpful, and it makes everybody a lot more knowledgeable and gives me confidence that I'm doing the right thing for my client because I really know their tax situation a lot better than I would if I hadn't have asked for it. So anyway, I just wanted to produce this video just to talk about the importance of reviewing a tax return after a client has done their taxes. And it's also really handy to look back at some of the previous tax returns as well, just to see how we compare, how we've been running in retirement if they are retired. If they're working and about to retire, hey, you may say, hey, that doesn't really mean anything because their previous tax returns don't really mean anything because I had all this working income and now I'm not going to have that in retirement. Well, maybe you have some tax loss carryforwards that we should take into consideration. Maybe you have substantial income that affects Medicare premiums in 2 years. We just don't know. It's good to look at the information. So anyway, I'm not a tax advisor. You should always trust your tax advisor, your CPA, when it comes to important tax decisions. But if you have any questions about just looking at a tax return, running a tax report, if you'd like to get a little bit more detail about what I do for my clients, please, my contact information is in the About section of my YouTube channel. And I really appreciate you watching my video.